Welcome to Connective Home Loans TV. Again, I welcome Jess Fayano from Advantage that's in here to answer some of the hard and difficult questions with, I suppose, around policy and all of that. Just to give you a brief overview for the people that have tuned in this time that haven't been here before, it's quite a simple format. We'll talk about what's happening in the market at the moment, what niches are there, what sort of feedback we're getting from broker land. And the other thing, obviously being a live webcast, you can also put your questions up on the screen. So we'll answer those and endeavour to answer those as we go through.
Absolutely.
So pretty simple format. The other thing is that we have fastest finger first, so have your mobile phone handy. At some stage during the broadcast, we'll pop up a mobile number and the first person to call in will win a gift voucher there. I think this week we've got a $50 gift voucher.
Very nice.
Yeah, so just to give you a bit of an outline of what we'll cover today, we're going to talk about turnaround times. It's very topical at the moment. I know some of you are struggling with other lenders on the turnaround, and it's very hard to sort of deliver or manage expectations from the customers when putting applications in. So we'll talk about what we're delivering both through our smart options and also through our essentials product in the way of turnarounds. Some interesting changes in relation to financial statements and also pay slips. We'll talk about a bit of feedback that we've had from our Connective Home Loan workshops, some sharing of best practices. We've been out doing some workshops in some of the states and getting some really good feedback from the brokers. So without further ado, we'll kick into the program. One of the first things on there we want to talk about today is the new valuation process, Jess.
Absolutely.
So if you just want to cover off what the changes are there.
Yeah, so the change with the Essentials product is we've always had free upfront valuations as part of our process. What we've looked to do is bring in a way which we can actually speed up that process and make it more efficient. So coming in the middle of this month will be AVMs, desktops and curbsides. Mm-hmm. So we're actually going to bring in valuations that will be done a lot quicker, still completely free and upfront, that a broker can order through their current RP data portal, and it's also going to be built into Apply Online. So you've got two mechanisms to order it, yep, but it'll really speed up the process.
Yeah, it's interesting with that, you know, the valuations when you talk about speeding up the process. You know, that is where we want to concentrate. We've done it with our quality program. It just means a whole lot of, you know, basically a quicker turnaround, because if the underwriters are getting that full application with the valuation in there, obviously the time to approval is a lot quicker. I know there's a program in place for those low LVRs, sub 80 LVRs. Tell us a bit about what the underwriting team are doing with those. Yeah,
so internally we have a process where we're really focusing on quality. Now everyone out there, I'm sure, has probably had a quality conversation with their BDM by now. That's our real focus. You know, internally, our goal is to pick up your deal once and formally approve it. You know, outside of a pre-approval, there's no reason why that isn't achievable. Yep. So what we're doing internally around quality is where those deals are sub 80 and they are well packaged, we actually have a team that's dedicated to picking up those deals first. And what we're actually seeing is turnaround times for those deals are within 24 hours. Yep. So best example is Monday night, I had a broker submit a deal at 6:20 Monday night. Yep. By 12:30, they had an approval on Tuesday.
Fantastic.
Now, they got a generic email saying you'll have a response within 3 days, but within half a day, they've got that.
Yeah. It's another good news story just to share there, and we talk about turnarounds to approval. Nick Walker, one of our brokers here in Victoria, not last week, the week before, had an application submitted on the Wednesday, formal approval on the Thursday, docked on the Friday and settled on the Monday. So, you know, if there's a real need, and that had been to another lender, it had fallen over, so there was a real need to prioritise that. And the guys did a fantastic job of, you know, getting it approved, getting it docked and meeting the time frame. So we've got the ability to do that. We're not out there with a super special rate at the moment that's going to blow up the underwriters. it's consistently good turnarounds, and that's what we're working towards. Not only with rate, but also with good quality, I suppose approvals and quick turnaround as well.
Yeah, and I think the real key to there is it's about, help us help you, almost from a broker's point of view. So, the deals that come in well packaged, we can turn them around quicker, and it actually will build greater efficiency into the whole process for everyone.
Yeah.
So it's a win-win because it's far more efficient for our business, and I'm sure, every broker wants a formal approval as that first decision.
Yeah.
And even with the fully assessed pre-approvals we do, you can have a pre-approval nice and quickly subject to a contract to sale and evaluation.
Yep.
So it gives your client that confidence when they're going out to that auction this weekend as well. If you submit that pre-approval still well packaged, you're going to get that quick conditional so the client can go out with confidence.
Yeah, I think the proof of the puddings there is that, we've been out at a 381 carded rate, 10 basis points off obviously 371 under the quality program. So at 371, pretty much the start, pointy end of the market, our volumes have substantially increased in application flow.
Yep.
Yet those turnarounds have not gone out beyond 48 hours. So we've got capacity there. We can scale up. The more applications we get, we can continue to turn around and have those good turnaround times.
Yeah, and I think that's been a really important focus within our business as well. Is we're conscious that turnaround times are a really key part of a broker's business because you need that quick response to lock in your client.
Yeah.
So internally, what we've done is we're actually recruiting at the moment. We've brought on new staff within the last month. So you may see names that you haven't dealt with before because we've brought in 4 new credit assessors. We're also beefing up our admin team, which we've brought in 3 new people, which I met yesterday as well. So, our turnaround times are good, but we want to maintain them as well. So, rather than traditionally being reactive once things have gone on, we're actually being proactive to make sure that we are catering for that volume and giving the brokers a great service that they expect of us and that we aim to deliver. Yeah.
I'll just actually share some figures, Jess, and just to give you a bit of an idea of the success of Connective Home Loans. Like we're 14 and a half months in since we relaunched, and we're pretty excited that we've just surpassed the $1 billion in settlements for Connective Home Loans across the brand. So that's a huge milestone for us. We're running at about 5% of settlement volumes against the other lenders. Another interesting stat, and I had it here, we've actually had 683 of you Connective brokers actually achieve a settlement with Connective Home Loans, which is about 25% usage.
Excellent. That's great news.
So again, we're very happy with the take up. And the one thing is, it's not just because it's Connective Home Loans, brokers use it. We really want to establish it on good service, good product, good turnaround. And also making a difference that it's not a retail brand that you're flogging them, putting the customer in the hands of a brand where they're talking to customer service, chance to be outsold, etc., etc. So yeah, it's a business strategy and it's also the product as well.
Excellent.
One of the other things on the list here, mate, financial statements, pay slips, all that. Just let us know what's happening in and around the changes with that at the moment.
Yeah. So the big thing is, and it's financial statements are probably a big topic right about now that I'm getting from a lot of my brokers, especially now that we've clicked past the end of June, so we're into the new financial year. Yep. Particularly around, how can you utilise that 2016 figures where your client needs it for their income.
Yep.
So the way our policy works with the essentials is we actually don't require the 2016 information until April next year.
Yep.
So if you've got a client who services off their 14 and 15 figures, that's perfectly acceptable. But where the real key and the recent policy change we made in April was that if you've got a client where you do need to introduce their 2016 figures, we have a policy where if you have an accountant's prepared balance sheet and profit and loss, and we can clearly articulate the client's income, we can actually use that to assess their financial income in place of tax returns.
Okay.
Which means that for your clients who are self-employed, I mean, and realistically, we know most aren't lodging their tax returns until next year.
Yeah.
Where you've got that accounts prepare balance sheet and profit and loss, we can actually use that to verify their 2016 income.
Okay, so it doesn't need to be submitted so long as it's coming from the accountant.
Yep, that's exactly right.
Okay. Is the policy still in with remaining debt, or is that's still part of when the assessment is if there's a remaining debt, it's just a loaded rather than the floor rate?
Yep, absolutely. So our treatment of the OFI debt is we'll take the actual repayment on any settled debt and we load it by 30% in our calculator.
So that's even if it's interest only?
Correct.
Okay, so if I've got an interest only, just whatever the repayment is, we add by 30%.
30%.
So, well, that's pretty good, because that means if you've got a 3.5-4% rate, you're assessing it just over 5 rather than 7.4.
And that's exactly right. And it hasn't been converted to principal and interest.
Yep.
So what we are finding a lot of within our business is a lot of clients coming to us who have multiple properties.
Yep.
Because our serviceability is strong. It allows them to purchase that next investment. And we also see a lot of it actually allows people to purchase that new owner-occupied home that they're after. Yeah. So where that debt remains OFI, our serviceability calculator is very strong.
That's good. Actually, when we were just doing the last, I did some workshops earlier this week in South Australia, and also did a couple in Perth as well. And it was the workshops. Look, there's some coming up in Victoria, in New South Wales, and also Queensland. It's more an open forum, and what we're talking about in those is really just sharing some of the best practices that other brokers have shared with us, and also talking about what we can do in our business to diversify and position a white label offering in front of a customer as well. One of the things that did come back during that discussion when we were talking about consistency is the real, sometimes the difficulty in serviceability calculators for self-employed people. And look, I had the local BDMs there, and the one thing is that if it's self-employed, if that's that bit of a grey area, you guys are fantastic at having a look at something commercially and trying to make it work rather than say no. So what's your recommendation to brokers with those self-employed people? What should they be doing?
Look, so if you've got a self-employed client that does have a unique structure or a complex structure, that's really the time where utilise your BDM, but we've also got the dedicated scenarios team, and I think that's a really important place to call on, because you can break down the financials, send it into the scenarios team with the serviceability calculator, and it's almost a this is the way I've worked it out. Can you confirm if I've done it right? Yep. Can you confirm if that income's right? Because with self-employed, you can get some very unique structures, some very different structures, and there's different ways to interpret it and look at it. And particularly where I actually seem to be getting a lot of questions at the moment is, how do we treat debts that are held in a trading company's name? Particularly around businesses that have vehicle leases. If the debts are in a company name and it's a trading company, we look at it as those debts are maintained by the company. Because it is a residential assessment, we actually don't then expense them in the A&L position of the client. So your serviceability for those clients is actually quite easy to determine, because we're really relying on a taxable income. But our scenarios team will help step you through all of that, because we appreciate for self-employed, most clients are quite unique. Yeah,
I think it's a key point of difference especially with Advantage, because even talking to it's really great to hear that from brokers that have used Connective Home Loans Essentials, and I'm really finding that the brokers have got, if not a stronger relationship with that underwriting team and those specialists, which they're dealing with the transactions one-on-one. Not saying that you're not a great guy, mate, but because those guys are so helpful and they're looking after the broker after you've done the BDM side of it, when you're dealing with a real transaction, they all know them on a first name basis. They're really getting confident that it's great. We can access the underwriters, we can access the people that are making the decisions, it's great. It's giving brokers confidence to say, well, I can get an answer. I can talk to the person that's making a decision.
Yeah, and I think that's really important to the way that we've actually set up our operational team internally. So within the office, we actually have state-based credit assessment teams. Now, they're in 101 Collins, but they're actually dedicated to brokers from Victoria or from Queensland or from New South Wales.
Yeah.
So what it does is it allows, you as the broker to build that relationship with the credit team. And I'm sure everyone can appreciate, as you get to know the way people work, you build those relationships, it becomes a lot easier to get those deals through and to work together. And the feedback I've gotten from the brokers I deal with, it's that working together that's the best part.
Yeah.
We'll pick up the phone, we'll call you at every touch point on the deal. So you're actually working together. There's a couple of quick questions, a phone call, yep, we're comfortable with that, and the deal will proceed. So it's that collaborative approach, I think, has been the real key to the success. As you said, with the numbers in the short term we've been out, to have reached $1 billion, you wouldn't do that without great working together and customer service.
Yeah. No, that's good, and it's definitely a point of difference for us, because I really don't think any of the mainstream lenders, any of the major banks or whatever, are creating those relationships or those close relationships. There may be a close relationship with the local BDM, but ultimately they're not necessarily the people making the decisions on the deals that they're putting there.
Exactly.
So there's a real dedication to that part of it. Which is great. Look, the other fantastic thing is, we've had some great take up in WA, but the fact is that you guys have made a real investment in making sure that there's resources on the ground over
Absolutely.
there, both underwriting and both BDMs, which means in real time, and we're coming up to daylight savings. There's a 3-hour difference to the eastern seaboard. So it's great because it means the WA brokers can access within normal business hours. But also if there's a spill in the eastern states of inquiries or deals that need to be looked at, it also extends our access time for brokers all over Australia as well.
Yeah, exactly right. And in the WA office, we have a great mix of very experienced people as well and higher delegation sign-offs. So they're actually capable of doing those larger deals and the complex deals. So the WA office will cater for all the types of deals that your clients have.
Yep.
Some of our underwriters in that office have been here for 10 plus years. So we've actually got a great mix of experience and a team there. And Sharon, who manages the credit team in that office, is a great resource, has been a broker herself. So, for those WA brokers, if you ever actually need to go into the office to speak to the credit teams, to have someone come out and even help you with those complex deals, we can also offer that as well.
Yeah.
So the service to that WA market, because of that time difference and this backup support that they give the rest of us, has really been fantastic in maintaining a great consistent service level. Yeah,
I think the other thing too is consistency in underwriting and consistency in decisions as well. Quite often it can depend on which underwriter that you're getting. Look, it's the same with the mortgage insurers, Well, if I go back, and unfortunately I've been around for a long time, but, you'd always have your fingers crossed that your deal would fall in front of a particular underwriter because they understood how to put a deal together. I think consistency across decisions at Advantage is excellent. It's just like, because they're looking at ways of doing the deal, they're all looking at exceptions that they can apply to make sure that deal gets across the line. I think the only problem that anyone has a challenge with dealing with brokers nationally is sometimes that local knowledge in relation to the security property. But then that comes down to clear postcode guidelines, etc. So the only time that I see, maybe not sure about a particular property in a particular area, but that's easy enough referred on to a state later on. So long as we get the real nuts and bolts of the loan, it's a simple yes or no, whether it's in Perth or whether it's in Victoria or whether it's in Queensland. And I think that consistency is really good.
Yeah, and I think that's the key, because we really do look for ways to approve a deal, and we're working together with the broker to approve it. We have a really good success rate there. And you touched on sort of postcodes and sometimes that property knowledge for the area. And I think that's also one of the big reasons why we have the free upfront valuations, because where you do have properties in those regional areas, any credit or any scenarios team, the largest caveat to that deal will always be subject to a satisfactory valuation. So particularly what I always suggest brokers to do, that from my days in credit and also out on the road, is if you've got a property that you're not sure of the location, have the upfront valuation done, because what we have the ability to do is you haven't signed applications, so you're not putting a client through a lengthy process to find out if something goes wrong.
Yep.
You can get that valuation up front, but you can actually send that into the scenarios team.
Yeah.
So if you're not sure about the security, you can send the valuation in and ask the scenarios team, look, this is the property, this is a bit of story about the client's situation. Would that property be acceptable?
Okay.
And that way, you're determining whether the property will be acceptable before you're having to go through the process of lodging applications, using your time or the client's, potentially unnecessarily if it didn't work.
Yeah. We've spent a lot of time talking about the service at the back end of the underwritings, underwriters and what we provide there. Look, the other things that we need to talk about, and obviously we need feedback from our brokers, is that there's certain things in the process that we don't necessarily control, and that is valuations and also the documentation side and that back end as far as putting documents together. In that case, and there's only one system available, and that's basically, or there's multiple now in relation to valuations, because you can do your desktops, but they're all through Valex basically. Correct. Anyway. Yeah. The one important thing with that is that if there's a particular broker with a particular valuer with a referral source, we can remove one valuer from there, but we can't select a valuer.
Correct.
The other thing, obviously, with Essentials is the docs are prepared by MSA in all cases across all states. Now, generally we're getting good feedback, but I don't know, and I can't correct things from the brand point of view unless I'm getting issues when they are happening, not brokers saying, I had a deal settle a month ago, and the service was like the public service. It doesn't help, and I can't manage or look after a deal at that particular time if that is the case. One question that we do have up there is, can you use MYOB in-house for balance sheets 2016 account looked at?
If it comes with an accountant's letter, so the policy is written that it has to be accountants prepared balance sheet and profit and loss.
Yep.
So it really needs to be truly coming from an accountant. But in a situation, if you've got an MYOB and your accountant's actually preparing that, signing that off that these are the true and correct figures, we can certainly look at that. But where you are trying to utilise an MYOB, that'd probably be something I'd run past our scenarios team first. Because the policy is that it's accountants prepared. But because we do have the ability to look outside of policy, if it makes sense and there's a certain situation, then look, contact our scenarios team and we can work together for the right solution.
Yeah, look, maybe in that case there, if the scenarios team can actually look at the MYOB statements before and saying, yes, if the account will substantiate that, we're a goer, rather than getting a whole lot, way down the track and everyone putting time and effort into it, even, the customer's accountant. Let's see if it's going to work first. So for an early stage, let's have a look at it. That's probably a good way to go. And I'm sure the guys understand MYOB statements anyway.
Oh, absolutely. And look, that is why, we do refer to our scenarios team, probably in every one of these that we've filmed as well, is because they're a great resource that's there to help you. And the way our scenarios team operates, it's people with live credit delegations. So they're very experienced, they've been credit coaches, they've been underwriters. They're actually helping find a way to make those deals outside of policy work. And it's about being open and transparent, because if something isn't a deal, you get to know up front, or if something's a bit outside of policy, like the MYOB situation where, okay, we may be acceptable, we may want one or two other documents to confirm it, or depending on various situations, that up front. So definitely a great resource, and I can't emphasise utilising those guys enough.
Yeah. Another interesting thing that came out of the workshops, and I talk about consistent, not necessarily coming in and out of the market with a special rate at any time, being consistent with rate and trying to be right at the front of the market. We had some great examples brought up, and I won't. There's a couple of lenders, and probably a lot of you are aware of it, that actually have had recently, say in the last 3 or 6 months, a special rate. And with the recent rate change by the RBA, those customers have been treated very differently in the way of rate reductions to other people that have had loans at higher rates. The one good feedback, and it was actually from broker as well, is that, RBA dropped 25 basis points, NAB Advantage dropped 10 on the back book, but we only adjusted 10 basis points on the new business as well. So what that creates is a real consistency with the customers that have settled and what their rate is to what any new business rate that you would have. So hopefully, as those rates go along, then they will not see a new business rate that is any less than what they've got at the moment. So, trust is an important thing. And, you think about a customer's experience. When you've built their trust, you've got them a great rate, you've got them a 3.99, and then the next thing that they're looking at their rate and it's 4.25, and you're still selling loans at 3.99. So long-term relationship is important, and we think we can play a part in that by being consistent in those rates, not coming out with a special rate, not treating the existing customers any differently. It's across the board. What you move at the front, you move at the back. So that's an important part of, I suppose, the relationship too, which then actually it's truly demonstrated in the average life of loan of a white label loan. It's actually a longer term than a branded product. So again, to validate, another reason to use a good, consistent partner that delivers consistent rates, consistent service, consistent turnaround. It's good for your business as well.
Yeah, and I think that really ties into what we're about in a white label product. We really see this as a great tool for your business as a broker, because it also helps build referrals. You're giving your client a great quality solution up front that they can't go get anywhere else. You can only get the Connective Essentials products through a Connective broker. So by giving that great service and by keeping that quality rate and consistency throughout the life of the loan, it's actually going to give your client confidence to recommend their friends and family to you as the broker for this product. So you're selling a unique solution that's quality for the client, but also helps you build your business. And I think that's a very important part of really what we're trying to do here. And I think also it's been shown in the success we've had so far.
I'm actually I was trying to read a question there. There's one that says, can they have interims on the financials? So if I've got interim financials that are backed by accountant's letter, is that acceptable?
So we wouldn't work off interims. So we're looking, when we're trying to utilise a year, it would be for the full financial year.
So the 30th of June 2016.
But it's also about understanding the full spectrum of a deal. So a perfect example of a scenario where interims actually helped me get a deal over the line earlier in the year was, I had a client who had 2014, they earned 50,000. And there was a business partner in there that was doing wrong things, which is why that was lower than their normal business. 2015, they earned 250,000. So substantial increase, which is what we would call outside the norm. But they actually had interim financials to March 2016. It was a deal a few months ago. And they actually had earned $250,000 year to date in 2016. So what we actually did is we used that information to support using those 2015 figures in isolation. So as much as we say, no, we're not relying specifically on the interims, it actually is a way to look at an exception, go outside of policy, because on the technical 14 or 15, that deal wouldn't have worked. The interims helped us get it over the line, and that was a $1.6 million deal as well. So where it makes sense, that one was run by our scenarios team, given the all clear, and the deal's now settled.
I suppose that's a real seasonal thing anyway. So, at the moment, here we are at the start of September, so we don't even have first quarter BAS available. And we've only got a very small part of the 16-17 year completed anyway. That may well be something that, come the first half of 2017, when you can reflect on a couple BAS statements or whatever to add, some meat to the deal, that would probably be at that stage where we could consider, but you could consider looking at those things.
And I think that's the important part, because within our business, we don't, credit score up to an 80% LVR. When it's above 80, mortgage insurance, policies become a little bit more stricter. But when a loan's, up to an 80% LVR, we're very commercial and we're very logical at the way in which we look at the transaction. So if you've got a client who is self-employed and their income situation, maybe doesn't fit the technical policy boxes, don't write us off.
Yeah.
If it makes sense and if we can justify it, we can look at that transaction. Now, I'm not going to sit here and say we can do every deal. That's not realistic. But, it's really, that's when you would make a call to the scenarios team or your BDM, have a bit of a chat about the situation because, we are quite open if it makes sense and nothing to lose by making a phone call.
Yeah. Yeah. Just one there before we get back onto the main stuff, or not saying that the questions aren't the main stuff anyway, but we've got to answer them. Where do we find the LMI calculators for essentials? Do we just use the estimator on the Mercury funding calculator? You can use the estimator on the funding calculator, but the QBE premium table is actually attached in the documents within the services tab in Mercury. So they're pretty consistent anyway, but if you want to check, like you have to do, it's always recommended that one, you check your serviceability to make sure it's right, and two is always just make sure that you check that LMI premium calculator as well.
Yeah, exactly. And that premium rate sheet is when you go through the services tab, it's actually under the serviceability calculator section with the serviceability calc. So put them both together to make it nice and easy.
All right. Okay, so before we get into some more discussion, the thing that we do is fastest finger first. So I'm going to pop a mobile number up in front of the screen, and the first person to call through will receive a $50 Myer voucher. So there's their mobile, 0418 993362. And we'll see how quickly it takes for someone to call in. We've got nearly 150 out there and they're pretty slow on the take. Oh, here we go.
We've got one.
Yes. Come up there. Terry Hickman, how are you, mate?
G'day, Michael. I'm very well.
Yeah, very good, mate. You're a contest junkie, mate. You've always got the big show bag when you go away from the PD days, mate, and now you got the $50 Myer voucher.
Absolutely.
Good on you, mate.
We've got our footy tipping competition wind up tonight. I won that too.
Oh, there you go. What do I say? It just confirms it. So he's won the footy tipping competition too. All good, mate. Mate, I'll be in contact after the show and we'll get that voucher through for you, mate.
Fantastic.
Good
Thanks
on
very
you.
much.
Cheers, mate.
Well done, Terry.
Yes, Terry Hickman. Yeah, up on the New South Wales Victorian border. Terry's a great supporter of Connective Home Loans. I did talk earlier about the workshops. Monday, Tuesday, we do have some workshops and still some positions available on those workshops. They're going to be held in Brisbane at our Paddington office. And then on Wednesday and Thursday, we've got some sessions in Sydney at the Lime Street office of Connective there anyway. They are all on the event, so if you did want to come along and join the session, as I say, it's a real open forum. We talk about some business coaching as well, and sharing of best ideas. The other thing that we're going to do different, we've decided, originally we were running this Connective Home Loans TV bi-monthly, and I think everyone's getting a lot out of not necessarily the product stuff and the operation side, but the real positioning part of not only Connective Home Loans, but how you can bring a whole lot of other things to make a difference as far as a consumer sees you in their eyes by offering things like Connective Asset Finance, like Connective Home Loans, the insurance offering, the life insurance, all of those other things. And, so next month, we're going to run a special. We'll get the invite out for the Connective Home Loans TV, but we're going to get Brett Starenberg along from Connective Asset Finance, and we'll talk about not only some really good positioning tips for Connective Home Loans, but some really good positioning tips for asset finance and leading in to other transactions beyond the mortgage as well.
Excellent. It'll be a great opportunity.
Yeah, no, it's good. And look, they're the main things that have, I suppose, have really come out. You know, I often talk to it, and a lot of people have heard it before. Is like, you know, if a broker comes in and sees me, if a customer comes in and sees me, and they would say, I want a national bank loan. You know, if I was ballsy enough, I'd just say, well, you know, if you really want a national bank loan, just go down the road because there's a national bank down there. If you really want to explore different solutions or whatever, that's what I'm here for. And I think quite often we don't really position ourselves to make ourselves really important. You know, you're sitting in front of me for a reason. And the reason is that I'll bring other solutions to the table. I'm not about a transaction, I'm about a relationship. You know, it's mortgages today, but, you know, your asset position will change, your debt position will change, so that takes into account, you know, insurance and all of that. So in those workshops we talk about that pre-positioning statement. If it's not on a website, you've got to be telling the customer yourself. And we've had some really good examples of how to pre-position that. So that's one thing out of the workshop, but we'll also cover a lot of those in next month's Connective Home Loans TV as well. So that's it. Mate, I think we've pretty much gone through the list of. We're getting some really good positive comments there. Really
Excellent.
Informative. Yeah, great looking guy, MG. But
They love your haircut, apparently.
Oh mate, there's not much here. It's all blown away. So I think we've probably covered things. I think we've covered off most of. We've covered off all the questions, I think, anyway. So yeah, that's it for Connective Home Loans TV this month. It won't be too long before we have the dates confirmed. I've got to check with you, mate. I know your calendar's pretty chock-a-block, but we've got to just check with Jess and also with Brent. But I'm sure that would well be worthwhile tuning in. You know, we'll have a bit of fun with it, but we'll also hopefully, you know, like anything you go to, whether it's a training session or whatever, if you can walk out the door or walk away with one bit of gold, it could be that bit of gold that makes a real difference to your business.
And not just another My Voucher.
Not just another My Voucher. My Voucher is important. Okay, so that's it for Connective Home Loans TV this month. Jess Rano and Michael Gurner saying goodbye.
Thank you.